Well, it's time to take a perspective look at fresh outlooks on the country's economic growth pattern for this year. The International Monetary Fund has downgraded Nigeria's 2020 growth projection, saying the economy will shrink by 5.4%. The IMF earlier in April projected that the country's economy would contract by 3.4% this year. The IMF disclosed its new forecast on its overview of the world economic outlook for June, titled "A Crisis Like No Other, an Uncertain Recovery." It stated that global growth is projected at minus 4.9% and in 2020, 1.9 percentage points below the April level. And the World Economic Outlook forecast. The IMF notes that the COVID-19 pandemic has had a more negative impact on the first half, in the activities of the first half of 2020 than anticipated, and the recovery is projected to be more gradual than previously forecast. Part of the report reads in China, where the recovery from the sharp contractions in the first quarter is underway growth. Underway growth is projected at 1% in 2020. Supported in part by policy stimulus, India's economy is projected to grow, contract, by 4.5%, following a longer period of lockdown and slower recovery than anticipated in April. The disruptions due to the pandemic, as well as significantly lower disposable income for oil exporters after the dramatic fuel price decline, which implies sharp recessions as the GDP will contract 6.6%. That's in Russia, 6.8% in Saudi Arabia, while South Africa's performance will record minus 8.0%. Joining me now via Skype to discuss these figures and other projections is a professor of finance and capital market of Nasarawa State University, Uche Uwaleke. Thank you very much, Prof, for your time.
Yeah, thank you, Tolu, for inviting me.
Let's start with these projections from IMF. Earlier in the year, they came up with some figures. Now they are coming to say the growth is going to decline by 5.4%. How does this come to you?
Well, there's no doubt that COVID-19 is still impacting negatively on global economy. But I think the forecast for Nigeria at 5.4% contraction, I think it is rather on the pessimistic side. In view of the fact that it does appear the IMF didn't take into account the countermeasures that are already in place by both the fiscal and monetary authorities to cushion the impact of COVID-19. Of course, you do realize that forecast is nothing but an intelligent guess. That's the way I say it. And particularly in a period of uncertainty, which even the IMF report acknowledges, in a period of uncertainty, the forecast, the accuracy is really challenged. So much so such that you now find a high margin of error between what the IMF is predicting and what the World Bank is predicting, including that of our National Bureau of Statistics. The World Bank, for example, is talking about a contraction of around minus 3.2%. That's the baseline scenario, assuming oil price averages $30 per barrel, and then the pandemic is contained, significantly in the third quarter of 2020. Lower still is the prediction by the National Bureau of Statistics, what we have in the Economic Sustainability Plan document, which using even a cautious scenario is predicting that the economy will drop, will contract by just 2.8%. Okay, and if we use the $30 per barrel assumption that was used also by the World Bank, that the economy would attack by just 0.59%. So you find a wide margin between what the NBS is saying and what World Bank is saying and what IMF is saying. So I think that of the IMF is rather a little pessimistic in the sense that in what our authorities have done, the Economic Sustainability Committee, they are taking into account the injection of about 2.3 trillion naira, into the economy, and of course that represents about 1.5% of our GDP. So if that is effectively implemented, okay, they see no reason why the economy should fall by as much. So the highest projection they've done is 2.8%. That is if all the measures they are implemented. Again, bear in mind that what that means, if the economy is going to shrink by 5.4% this year, it means that effectively between now and the end of 2020, the contraction will be as high as 7.3%, because it has to be that high to be able to cancel what we have in this quarter of 2020, the 1.8%, recorded in one of 2020, which of course is the growth. So I think it's rather optimistic. I also think that if the measures put in place both by the government and the central bank are well implemented, we may well not record that magnitude of traction in Nigeria. Specifically speaking.
Okay, Prof. Let me butt in now. I think we're having a little bit of challenge. I think from your end, the network is. But let me ask you this: despite reopening of economies globally, we're still not seeing it. It's not hoo-hoo anywhere. You can even see the figures getting higher in like the United States, and everybody's worried. How does this come to you? So we are saying a total restart of the economy might be more delayed.
Yes, I agree with you. The numbers are rising. But again, if you also look at places like Europe, Italy, for example, Spain and Greece, these countries that used to be the epicenter of the pandemic are also beginning to restart. So the economic zone, the European zone, is gradually reopening. And I also understand that also includes the cross-border travel. So economies are gradually reopening, and that's also rubbing off positively on the oil price. Part of what you find happening now is demand for oil appears to be strengthening with a gradual reopening of economies, including that of China and India. So if oil price today is hovering around $39 per barrel, $41 per barrel, it's partly on account of that, and also partly on account of the production cut agreement by OPEC plus. So if you look at the forecasts that have been made, they have been made based on oil price not falling below $30 per barrel. Or rather, we have forecast for $30 per barrel and $20 per barrel, as well as $15 per barrel. So if we are lucky and oil price stays above the budget reference price, 2020 budget reference price of $28 per barrel, again, I say I want to be positive about it. We may not see that level of contraction. The bulk of the contraction we are likely to experience in the second and third quarter. The fourth quarter of 2020 may not be that significant, and I see what will happen in the fourth quarter of 2020 kind of moderating the impact of the contraction we are going to experience in 2020. And I've told you why I think so.
Yes.
If you look at the GDP growth figures, growth numbers for Q1 of 2020, the oil sector, of course, was the major driver, growing by 5.06%. The non-oil sector didn't perform too well. It grew by just 1.55%. But if you disaggregate the performance in that non-oil sector, the agri sector only grew by 2.2%. So what that means is that if the measures being taken now by the government, especially in the area of agriculture, if they materialize, if they crystallize, it is likely to now boost GDP growth. So whatever loss we are going to have in the oil sector was Q2 and Q3 because of the production cuts that we are having and also lower oil price will be offset by the growth in the agriculture. Recall, Tolu, that in 2016, when we had the economic recession, in 2016 the economy grew by minus 1.6%. But in the middle of that recession, third quarter of 2016, the agri sector was even growing by 4%. So the agri sector growth helped a lot to mitigate the entire loss for 2016. So I also think that if you can grow the agri sector, a sector that contributed in the Q1 of 2020 about 22% of GDP, and we also continue our calendar of gradual restart of the economy, because the moment you open the interstate travel and the flight operations resume, I want to believe that the tempo of economic activities will pick up. Of course. Q1 of 2020 may not be that significant, and I see what will happen in the fourth quarter of 2020 kind of moderating the impact of the contraction we are going to experience in 2020. And I've told you why I think so. Yes. If you look at the GDP growth figures, growth numbers for Q1 of 2020, the oil sector, of course, was the major driver, growing by 5.06%. The non-oil sector didn't perform too well. It grew by just 1.55%. But if you disaggregate the performance in that non-oil sector, the agri sector only grew by 2.2%. So what that means is that if the measures being taken now by the government, especially in the area of agriculture, if they materialize, if they crystallize, it is likely to now boost GDP growth. So whatever loss we are going to have in the oil sector was Q2 and Q3 because of the production cuts that we are having and also lower oil price will be offset by the growth in the agriculture. Recall, Tolu, that in 2016, when we had the economic recession, in 2016 the economy grew by minus 1.6%. But in the middle of that recession, third quarter of 2016, the agri sector was even growing by 4%. So the agri sector growth helped a lot to mitigate the entire loss for 2016. So I also think that if you can grow the agri sector, a sector that contributed in the Q1 of 2020 about 22% of GDP, and we also continue our calendar of gradual restart of the economy, because the moment you open the interstate travel and the flight operations resume, I want to believe that the tempo of economic activities will pick up. Of course. Q1 of 2020, trade dropped. Trade in the negative area. But if we open, of course, ditto for accommodation and food supply. So if we gradually open up, you find out that the hotels, restaurants will be open, interstate travel will open, trade will increase, and the money the government is pumping in agriculture with a view to creating 5 million jobs will go a long way in also impacting the economy positively. So if you look at the economic sustainability plan, if it is well implemented, because it talks about mass housing doing 300,000 housing units within a period of in a very short period of time. So if that materializes, you can imagine what will happen to real estate growth. Real estate growth in Q1 of 2020 was minus 4%. So if we put money in real estate and we put money in agriculture and we try to grow some of these sectors that already that have the potential to even create jobs, I think the economy will not drop by as much as 5.4% for 2020.
Prof, I'm encouraged. Before I let you go, Prof, I like your comment. Let's look at business owners, particularly in regards to MSMEs. It's even the MSME day and all of that. What should they do short term, long term, so that they can still stay in business? Some say 2020 should just be a year of survival.
Yeah, yes, I agree with you. That's also why I think the pessimistic outlook is, isn't the one to embrace, because when you have a projection that is pessimistic, it has a way of even reinforcing that prediction. For example, if businesses feel that the economy isn't going to do well this year, for example, of course, they will roll back any investment plans that they have. Even individuals too will also begin to do more of precautionary savings, okay? And of course, that those are leakages in the economy, and they don't help economic growth. So on the part of government spending, of course, that is constrained by availability of revenue. So a lot depends on what happens at the level of private consumption and the firm's investment. So for firms, generally speaking, this is the time to look at your books and see what can be taken out in terms of cost, production cost, what can be taken out, admin and distribution expenses, again, what can be taken out. For production cost in particular, is it possible, for example, to take charge, to have a lot more control over your suppliers, okay? If you like, call it backward integration. As opposed to maybe previously over-relying on a single supplier, posing what we call unsystematic risk. So this is a time to think seriously about diversifying risks. And for micro businesses again, who before now have not been keeping records, this is also the time to try to put a few things together by way of record keeping, even if it means engaging accountants here and there to help them prepare that, because that will help them assess some facilities that are currently available. So I will advise micro businesses, small businesses, to take advantage of the raft of opportunities, raft of intervention funds that are already in place. The central bank has, so many of them. The federal government too has also, unfolded stimulus packages, including the giving grants. There are now we understand that there'll be grants for self-employed people, and especially those that depend on daily wage. So I think
Professor Uwaleke, Uche Uwaleke, thank you very much. He's a professor of finance and capital market from Nasarawa State University there, bearing his mind on the figures coming up from the IMF.